Welcome back to the Florida CME Group here in Chicago. I'm Killer from Treasury Curve. Got cash? We can help. Monday, June 6th, D-Day. A lot of moving parts in this market here, folks. You know, let's look at that Wall Street Journal yesterday. There's a lot of violence. This geopolitical tension continues to mount. Last week we saw a couple of down days in the market. Is this the week that the market gives us some clarity? You know, we've talked about this in exhaustion, but let me know. Here's the question of the day. Will the Fed respond prior to June 30th quantitative easing QE2 finale? Will they respond in the event? You know, last time we saw the S&P go down to 1250, we borderline saw Uncle Ben come to the S&P pit here and bid. You know, nothing. I don't know what the 15 million bid for SPU is, but that's what we essentially saw. So will the Fed respond if we continue to see these markets go down? Let me know. Get me at The Killer on my Twitter or comment here on this video. But let's look at this initially. You know, we saw the SPU, you know, the weekly pivot, 13.1275. You know, we're seeing the 100-day coming in at 13.50, and the 50-day way back up at 13.28. But let's not forget, folks, last Wednesday, prior to the ISM, we were trading 13.41. We have come down, you know, on my radar, the Killer radar is 12.93. Well, we hit that. We fulfilled that goal on the downside, so hopefully you had an opportunity to capitalize on that because we are in the CMZ, the cash money zone. So here we are now with the new low, the 1290s, trying to figure out the day. Kind of a lighter volume right now. Let's talk treasuries here. You know, the treasury, we saw a little bit of a sell-off this morning on the opening bell at 720. 720 was the opening bell in the treasuries in the pit here. It still provides all the action here. So at 720 you saw an initial sell-off. They sold that 30-year bond down substantially, down to that 124.17 area. You know, 127.02 was that upside target. We kind of got up there. Now we've come off, but right now we've seen a little bit of a bounce off there. You know, let's look at the 10-year. You know, a weekly pivot in the 10-year. I tweeted that this morning, 123.03. We came down, touched that, made a low of 123 even half, and then popped a little bit off of that. This is all reaction to the S&P, folks. You know, we're seeing the Dow, the SPU, even crude oil come off this morning, so we're putting a little bit back of bid. But they sold those treasuries substantially this morning. But that is the first time they have sold a treasury in quite some time. Look on that chart. Go back to the first week of April. What a wild move in the 10-year from 370 down to 295. Crude oil, you know, that 98.64 I think is the low right now. That's kind of providing a little bit of the lower band support area. You know, we're looking for another shoe to drop. There is a lot out there potentially, but I really think, you know, the talk, and Peter Yasser had another great interview. Peter, great job again on CNBC, but he's talking about, you know, this austerity, and could that be the catalyst to really bring us underneath? We'll see how it all shakes out. A lot of great commentary there from Peter. We appreciate that. Actually, hopefully Peter's going to be subbing in for me this week. I got a little travel coming up. But actually tomorrow, if you get an opportunity, 5:30 a.m. for you early calls, I'll be on Squawk Box on CNBC. So tune in for some more killer insight. From the Florida CME Group, have a great week trading. Be nimble, be quick, and be disciplined because these markets can move quickly. I don't want you to get it caught. Oh, and one other thing, please remember, be the hammer, not the nail.